And what I found was I was optimizing for the anomaly, which is the home run. I was optimizing my system for the daily swing, the daily lower low. And then when my journey was, I looked into it, I was like, how often does that happen? And a lot of times I'll be like, trade would go into profit, as you just said, and reverse on me and it hit break even. And I'll think, well, it's break even. At least I didn't lose money. And when you count it up in your head, you're like, well, that's a lot of money left on the table at the end of the month of those break evens that were up a little bit. So when I just looked back at I did 1,000 trades sample size, and I was like, okay, how many trades go to my final TP? How many trades go to my TP and beyond? How many trades go to just 5 pips, 10 pips in profit and then break me even or stop loss? And then when I mapped it out, it was like a bell curve where the home runs and those beyond my target were there, but they were not the main one. Those ones that were 3-5 pips in profit were there, but they were not the main one. Majority was somewhere in the middle. So I thought to myself, instead of taking partials based on what I see and feel and concepts, let me fix it for data. And it seems like you're doing an approach of that. And is it fixed at certain levels of risk reward or pip count, or is it fixed on criteria, static criteria like high of previous day and stuff? What are those exit points for you?
Yeah. It's usually always based off criteria, right? Because when you're scaling, when you're trading options, it's a lot more discretion, right? Because you have to understand that you have to not only worry about the underlying price of the actual stock, but you have to actually have to look at the options contract as well. So whenever you're looking to scale, right, when you always want to take partials and options, right, you want to take some off at the first profit target. But the thing that's so good about options, which is different than, let's say, Forex or futures, is that those option contracts, the more they are in the money, right, the more they'll pay you, right?
Okay,
so as like, right, let's say you take off 25% at the first profit target, 25% at the second profit target, and you have a couple of trailers running, right? Let's say you have 10% of your position running. That 10%, sorry, let me break this down into a more explainable thing, right? So you take off 80, let's say you take off 80% of your position at profit target 1, right?
Okay, that would be a intra-session target.
Yeah, that would be like probably intraday liquidity, right? You're maybe looking at the actual intraday high, right? But then you leave that 10% for an external level, or let's say previous day high or a higher time frame target. That 10% of the options contract, right, can pay you more than the actual 80% that you took off at high day.
How does that work? Why does that happen?
That's just because of the option contract itself, right? So for example, for you, right, you have a very fixed, you know exactly how much you're going to lose when you enter the trade. You know exactly how much you're going to make dollar wise.
Based on the targets, yeah.
Based
exactly
off the targets. But with options, because we have so much Greeks involved in the background, right? So we have delta, we have theta, right?
You're going to have to familiarize me because I'm not aware of these things. It's not my space.
Okay. So
what are these terms?
Right. So just in the most basic sense of what the audience kind of needs to know for this is when you're looking at theta, that's how fast the contract value is depreciating as it's going to the expiration.
Got it.
Because let's say it's going to expire on Friday, the option contract, let's say it's $20, it needs to go to 0, right? And so theta is how fast that's happening. Okay. And then the delta is how fast the option contract is moving up compared to how much the underlying is moving. So for the dollar and underlying is moving, the delta might be like 20, so it's moving 20 cents per the dollar move.
Okay, and these are fixed variables, as in you know them or you have to assess them?
They're constantly moving.
Yeah, you know them, but they're constantly moving as the actual option is.
So you have price and then these two other things.
Not two. There's multiple different Greeks that you have to worry about, but those are the two main ones you have to worry about.
That sounds complicated.
Oh yeah,
okay.
Options.
So you can't trade it in the sense of just price action charts.
Exactly, you have to work. So that's exactly how he was saying it, right?
Okay.
You can take.
I get it. Okay.
You can take that's exactly why I take high of day, right? Because I lock that money in, but then I know for a fact that sometimes my 10-15% will make more on that trade in dollar wise than the whole trade made the other 60-70% that I took out.
So in that case, because the upside is variable, dependent on time, I guess, the longer you hold it, the more upside you could have. Does that mean you modify?
Quickly, that isn't exactly, because the longer you hold it, you could technically make more, but then it's also
the decay.
Yeah, the decay is killing the contract as well.
So there is a sweet point you got to kind of figure out.
Exactly.
So have you found an optimal exit time? Is it like usually holding a trade for X amount of minutes or hours is optimal?
Yeah, when you're trading, right, how we trade is momentum and higher time frames, right? If we have our A+ setup criteria, like the best time is 1 hour after, right? Because a lot of the times you'll see when you're trading the tech stocks, like we're trading Nvidia, Tesla, right? If we have those higher time frame breaks, right, a lot of the times the best time to scale is 1 hour, and then the next best time is scaling at end of day, right? Because a lot of these times on the higher time frame breaks on the daily chart, we'll have continuation on the higher time frames, and then potentially, right, we'll hold that 10% on, let's say, overnight, and that 10% will make up make up more than what we actually scaled.
And you're entering on a fixed New York window.
New York
Open.
Yeah, New York
Yeah.
Open. So our
9:30.
entries,
I like it.